Okay, and we're live with another episode of the Focal Thought. And my guest today is Kyle Saunders. How are you, Kyle? How you doing?
I'm very well. How are you?
Good, good. Thanks so much for coming on the show. I'm really excited to have you on board. I first found out about you through a Facebook group called Wealth Simple, which I joined, and it's a great group, just as the other Facebook groups are, where like-minded individuals who are interested in investing or have a passion for investing can get on and learn from each other's ideas, experiences, successes, and failures. And from following your posts and from hearing what other people had to say, you've become some sort of a micro guru in that field. And leveraging off that, you've launched your own YouTube channel, which I believe is called Canadough Finance, right?
Yes, that is correct.
Okay, so before we get into sort of some of the investing topics I wanted to cover, how did you fall into this game of finance here?
Well, I was always interested in personal finance because my father, before his most recent job, was a bank teller and then became a manager of RBC, the Royal Bank of Canada, here in Newfoundland. So he encouraged me to understand debt and credit as well as investing fairly early on. And from there, I had a lot of interest in electronics from my oldest brother, who was doing a underwater robotics program at Marine Institute. So those two things came together when I was in high school, and I started to learn Python and a few different codes and learning about machine learning and AI. And I thought, maybe I could apply this to stocks. And then slowly I built up my confidence in creating and using a paper trading app. So I use Webull as well as RBC's paper trading app to test and see if these algorithms were correct. And I did a lot of research in how companies operated, and figured out what the best news articles were to follow to figure out whether a stock will go up or down, as well as the understanding the chart patterns and differentiating the resistance and support of these stocks. So I slowly got better at making fake money through those apps. And then once I became old enough to invest on my own, I quickly learned that it's much more difficult to trade real money when you know it's your own losses and your own gains. So you can't just rely on machines because your brain gets in the way quite a bit.
Yes.
But luckily, I took psychology in university, and slowly weaned myself off of a lot of the problems that come with initial investments and the highs and lows that come with gaining and losing money.
Okay. And just for those that might not know, what is a paper trading app?
A paper trading app is an app that you can get from most brokerages have a paper trading app. So anywhere, anything like Wealth Simple, your bank, or anything else will give you fake money to trade on real stocks. So you will have all of the same operations as a stock brokerage app would give you. So if you've ever used Wealth Simple with real money, what this is they give you a fake loan or a fake $10,000, or in Webull's case, they give you a fake $1,000,000, and you can invest it as much as you like on the platform as if it was real money. So you get to see it go up and down, and you can practice without the risk.
Okay, so it's equivalent to, maybe having a poker game where, you've got money there, but it's not real money, but you get the hang of the
Yeah,
game, right?
yeah, exactly. You still have the chips and you still get the feel of the win and the loss, but there's no actual dollar amount.
Correct. Okay. So then, this is where you started with and where you're at today. From what I've sort of seen, because I've also, I've been in the banking world, finance has come a long way. The instruments have come a long way, but also the systems have come a long way. And also, what people sort of think about, as finance has come a long way. Like, in the early 1900s, if you wanted to invest, you had to go to an institution and give your money up, and you pretty much didn't have a say in the matter. A professional would maybe take your money and invest it for you. But nowadays, with these Facebook groups, with direct to consumer technology, people can bypass that. They can do the same thing a financial stockbroker might do at an institution and invest it for themselves, right?
Yes. And that is where things can get dangerous, or at least in the eyes of many people who run brokerages and run hedge funds and so on. They see the unorganized masses of retail investors who are reclaiming their own stake in their own personal finance, and no longer relying on these general centralized finance. And a lot of them, not all, but many are able, at least in short term, especially if they're investing in penny stocks right away and they see these initial gains, they might think, oh, wow, I'm doing much better than a bank could have ever done for me, which can be thrilling, but it can be a harsh reality after a few losses overall.
Correct. And as we speak, we're coming from an environment where, we've had the recent GameStop incident, and, people like Elon Musk, who are sort of, controlling the market more than the actual valuation of the company itself, right? Like, I mean, I've always said myself personally, if tomorrow Pepsi were to buy Coca-Cola or vice versa, I really wouldn't know which way it would go, just on a surface level. But if I did the research, if I use the metrics that you're using, I might be able to speculate that there would be some sort of, science to that, and art into, in terms of being able to interpret that. But then when, someone does a tweet and that changes the evaluation of the stock, it's not based on, any sound reasoning of the company. And that's one of the dangers you're also sort of sounding out, right?
That sounds like it. I do understand your point. And it is definitely true that Elon Musk has a significant power over many things that they don't necessarily have the right to be in power for, because he's admitted outright that he doesn't fully understand cryptocurrency. However, he does understand its implications as a disruptive technology. When he tweets that he thinks Ethereum and Bitcoin are too high and they also crash, a lot of people like to cling to the fact that, hey, look, he tweeted and then look, it went down. It's not necessarily him that caused it. There is correlation, but there is not necessarily causation. These crashes that are happening in the stock market are consistently happening every week. These little corrections that we've been having for the past month also have been happening in crypto. Him saying that, oh, I think Ethereum and Bitcoin are too high, in a conversation that he had on Twitter with another engineer, yes, a lot of people latched onto it, and crypto did go down, but it also has recovered. And it's not that it is dangerous to not keep into account that Elon Musk has and many other influencers have a sway in the market, but anyone with influence has sway in the market. And that's what you should be paying more attention to. Because just as Elon Musk, who doesn't have a full understanding of the stock market, can influence it because he has a significant following. People like Cathie Woods, or the people behind ARK Invest and many of the popular ETFs, who can say, hey, this stock is going to be at this evaluation, but because they're an accredited financial company, it's not a meme. So it's not as fun, but it still affects the market in the same way.
Got it. So myself, as someone who's watching this on the surface level, I definitely don't follow it day to day like someone like you. I would
Yeah.
assume, like you're saying, that, because Elon said this, this is what happened. I would make that surface level correlation. But you are saying that there's some other dynamics in the background that are the natural correction of these stock prices, right?
Yes, there's a natural correction of these stock prices, especially when it comes to cryptocurrency. The correlation between Elon Musk's, there's a higher correlation between Elon Musk's pumps upwards of crypto than there is of Elon's ability to affect it to go down. If Elon Musk puts Bitcoin in his Twitter bio, or if they, you know, if himself and many other celebrities decide to push Dogecoin, which is an extremely inefficient and hyperinflated coin that will not really go anywhere, but can be inflated heavily by celebrity endorsement simply because it's so available to the public.
And
That, yeah,
go ahead, sorry.
that is a form of influence for allowing the cryptocurrency to go up, but the fall is more motivated by people selling on those highs, and it's more motivated on the behavior of the currency and the evaluation that comes from it being pumped up. It does not, one tweet will not cause a stock to go down. It would be a culmination of many people selling, and also a possibly devastating financial problem or political outcome of the company.
Got it. So from your impression, his tweet might have some minimal influence, but these are just the natural corrections that are happening.
Yes, the natural corrections are just that, corrections. They're not correct because Elon says so. However, celebrities endorsing things, as you can tell with the sales of Coca-Cola when different celebrities put it in their hands. Of course, sales and increased engagement in a company can easily be influenced by celebrities, but the failure of a company cannot as well be influenced by celebrities.
Got it. And do you think, like, from what you see, Elon is maybe trying to sort of, poke the bear, and no pun intended on, bear run or anything, but do you think he's trying to see if he can, cause something?
No.
No?
I don't think he has any malintention there. He might be pointing out flaws, but he just uses social media as anyone else would. He wants to speak to people. He's a normal human being that just happens to be achieving a lot due to the opportunity and personal drive that he has for success. So the tweets that he has, you should just be referring to them the same way you would anyone else on your Facebook feed or your Twitter feed. Yes, he has a larger following, and yes, some of the things that he pumps up or down may have relevant implications, but they are extremely short term, and you shouldn't be investing entirely off of what they say. And there's no way that Elon could be purposely being malicious in this intent, because if this person is spending hours upon hours working with Tesla and SpaceX and the many other companies, he doesn't necessarily have time to concoct a scheme to, lose a ton of people money or, load up on the currency right before he pumps it. It's legitimately just him messing around on social media the same as any other human would. And to say that because you're a celebrity, you can't have the right to express yourself without it having these outcomes would be a little ridiculous, but he has every right to have a Twitter account regardless of whether or not it affects the market.
And tweet his opinion. And once again, I'm not saying that he is or isn't, it's just being the advocate question. Yeah. Would it be different if someone like Ray Dalio or, Bill Ackerman would send out a tweet? I mean, to some extent, they're not allowed to, right? Because the SEC would be after them. And conflict of interest.
When you say conflict of interest, yes. So when it comes to insider trading, which is essentially, if you are within a company of a certain position and you are privy to information before the public, you cannot go public with that information until that information is public. There are a lot of people who break those rules and tell their close friend circles that, like, hey, you know, this company is going to be purchasing this company and it's going to go up. You want to buy this now? But if they were to make a public statement that is specifically relevant to the stock and information that is not yet public, then they can be liable if they are under some form of non-disclosure agreement.
Correct. And I'm glad
to say that it wouldn't affect them. Oh.
No, I was going to say, and I'm glad that the SEC is, you know, there to police, you know, such activities, because if they weren't, it would just be chaos and lots of money involved, right?
Yeah. But to the same extent, then Elon Musk tweeting about his own company could be viewed in that way if he were to give out details. But just saying, I believe that my own stock is a little bit overvalued is not the same as saying, hey, Tesla sales are down and all of this thing long before anything happened. Because he got in trouble for that about a year ago, where he actually released financial information before it was publicly released, and almost lost his own company at that point. But these tweets that he has now are just him personally having fun.
Correct. And, you know, we would see the SEC going after him if they had any sort of bearing, right?
Yeah. Is it okay if we move on from celebrities?
Yeah, no, for sure. We can take it any which way direction.
Yeah.
I wanted to ask, so, you know, for the regular person who's got some money to invest, what would you suggest from your experience, the best way they go about it? Now, once again, me coming from the bank world, I've seen, you know, I'm not belittling the banks or anything, but the way the bank staff does it, they've got sort of a template that, you know, they use, and they can recommend different, you know, investment models for the person according to risk. And not very many of the staff are, you know, day traders or, you know, pursue stocks as a passion, like say someone like yourself. It'd be great if they all were, but it's just not practical to do that. And I personally feel that, you know, if I'm putting my money with someone, I would want them to be not only the professional, but have the day in and out product knowledge, you know, to know what's going on in sort of the background, as you know, as you might know, because you're approaching it from, you know, many different mindsets, you know, the psychology of it, the algorithms of it, you know, the finance, math, things like that. So if someone wants to invest, would you recommend them seek out someone, you know, like who's a day trader, or maybe just go to the banks and, you know, keep it simple? What are your thoughts on that?
I don't condone them going to anyone in particular. I wouldn't want to direct everyone exactly to me. I wouldn't want to direct everyone to a financial advisor. I would like the idealistic world that you're saying, where every financial advisor has the same passion for the stock market as people like me do have. But there's also a conflict of interest in that statement, where if everyone who was a financial advisor was passionate about the stocks in the way that I am, that wouldn't be a very good fit for somebody who just wants to set up with, you know, some long-term investments and just let it sit around. And for the people who fit into the cookie cutter of here's high risk growth, aggressive growth, bonds, and all of these sorts of things, and the way that they divide it up in a bank is a catch-all that will apply to most people. But now that people are investing individually, what I would recommend, I wouldn't go to a bank aside from learning the lingo and the terms and everything you need to know about how the stock market operates. Your bank most likely will have free tools for how to use that. TD Ameritrade, RBC, Scotiabank, they all have resources that you can use to understand the general lingo of the stock market. Because when I actually got onto Facebook pages, there was a lot of acronyms that I didn't understand. I was primarily self-taught through myself and my father and people that I was connected with. So when I saw the two letters DD, I had no idea it meant due diligence. But I just thought, okay, people are saying DD when people aren't thinking before they invest. So to get into what we should do is, especially during this correction, do not invest all at once.
Okay.
Take the amount that you are comfortable with losing in there first. So if you have $100 that you can put in, if you have $50, if you have $10, put it into a zero commission brokerage like Wealth Simple or anything else along those lines, so you can just play with it and see where it goes. Before you get a general understanding, you can still expend for the entertainment value of seeing how the stock market goes. And then you would understand what your priorities are. So if you like this particular style of investing, then you can seek out individuals who cater to that style of investing. And then you want to look at your budget and say, how much can I realistically put in? And what do I want to spend that on? So I like to invest weekly. So I would invest every Wednesday. So then Wealthsimple takes 3 days for it to come into my account. So if I put money into my account on Wednesday, it'll be available to trade the coming Monday. So
Okay.
then I use that. If I put in $100, I want to pick a couple sectors that I want to focus on with that money when I buy in. So whatever ones are interesting to me, if it's clean energy, if it's clean energy, if it's real estate, if it's anything in the general sectors, I'll pick a few that I'm interested in and then research which stocks in that industry I can afford and which ones I believe are most viable. And then I would invest in those. And then the next time I invest, I'll pick a few new sectors. Or if one of the sectors I picked did really well, I can double down on that and make sure that I keep gaining from whatever sector it was I picked last week.
And the sectors, sectors that you pick, there's a mantra that says, if you're trading, trade with companies that you have an affinity with, right? That you may be passionate about the industry or something about.
Yeah.
Right.
That's something that I preach as well, especially when it comes to real estate stocks. If you're investing in a real estate investment trust, chances are you can look out your window and see a for sale sign somewhere on your street. There are many real estate companies that are within your local area that you will get that insider news long before most of the public, simply because you live in the area that this real estate company operates. So if you see them selling a lot of houses, maybe you want to buy more into that stock because you know that they're currently making money. You might have friends or family or know somebody who works in that company, so you can just get a general feel for how it operates and understand how that goes. But yes, you want to have an understanding of what you're investing into, because it's going to make it much easier for you to understand the news, because the news plays a crucial part in retail investors and how people want to buy and sell a stock. So if you are investing in a technology sector, say if you really like robotics and you understand the technical lingo that is, or jargon that is involved in robotics, you reading through the articles on robotics companies will come a lot easier, and you will know what is good and what is bad a lot faster than if you were to, say, invest in a cooking company and you have no idea how to cook for yourself. Then you would have to try and figure out all of not only the financial terms you have to pay attention to, but now you have to learn a new cooking vocabulary that you are not using in your daily life. So it makes it much more difficult.
Correct. You always want to pick something that you resonate with because, chances are you're already thinking that way. So then all you have to do is just learn the technical aspects of it.
And if you don't resonate with something right away, don't completely dismiss it. Just make sure that you do some research and figure out the industry first, then find the companies that you like, and then figure out your best based off of the financials of the company. If you're looking for a long-term investment, don't pay too much attention to the news. What you want to do is go to the company's own website, and then they will have a section for investor information. If they are a publicly traded stock, they have to have a section specifically for investors. Some of them are more detailed than others, but they all have to include their quarterly reports as well as specific news about their company. So you can use that and the details on their website about how passionate they are about their projects and compare them with the other websites to determine which one has the best objective, which one has performed the best in the past based off of their quarterly earnings, and then make your decision there.
Got it. No, thanks for that. I like that you've given sort of, that it's possible to start off like this if you want to do it on your own. And even if you don't, it's not so bad to, go to the banks and, work off a template or go to a financial advisor and just give them your money and, they'll do it for you. And you can follow some, ETF that follow the stock market. But like you're saying, if you wanted to go that next level, you can do this. And if you wanted to become advanced, these are the basics to get you to that, Ray Dalio stage or, people on that level.
I mean, if you want to play the Ray Dalio stage, all you have to do is follow ETFs. If you have an ETF that is investing in a newly up and coming sector, the ETF is only investing in the most viable companies in that sector. So you can look at, because all of these ETFs, which are funds that basically have a large amass of wealth in them, that is then invested and distributed along their focus. So PSYK is a psychedelics ETF, and they're investing in companies and pharmaceutical endeavors that involve psychedelics like psilocybin for the treatment of PTSD. So if you are interested in that topic, go to the ETF that's been created specifically for that topic and see which ones these giant companies with a ton of money are then investing in. Because not only are they currently the most viable in the sector, even if you believe that another one that's not on the radar of the ETF is going to succeed, they still do not have the same edge that being in an ETF that has a lot of funding going directly into that company has, as well as the exposure of being on the books of a holdings company like an ETF.
Got it. And then you can just mirror that platform directly, right?
Yep, you can mirror that platform directly, but if you're mirroring it directly, you might as well just buy the ETF itself, because then you'll have the same thing. But if you pay attention to the ETF and figure out which assets within the ETF are performing best, then you might be able to just slightly outperform the ETF.
Got it. So use it as education.
Yes.
Okay. If I can ask you one final question here, you mentioned learning psychology before, to
yes,
sort of help you with finance. I've heard David Ramsey say that money is 95% behavior. I've heard Tony Robbins say that money and finance is 95% psychology, and I really feel that to be true because you've got all the books out there, you've got all the theory out there. And, with people who try to do budgets, who try to do investing, in theory, it's one thing, but then it really comes down to emotions. And like when you're saying, when you're moving from, paper trading to actually putting your hard-earned money on the line, that changes everything, right? So the emotions really become the real market at that point. What sort of things do you look for in psychology when you're approaching that sort of point of view?
When I could give you a list of resources if you wanted to include them at some point. But when you're looking into the psychology of money, the easiest way to understand the difference between trading paper stocks as well than trading real money is the difference between if you're spending money on a credit card, you're not really thinking about it. But if you're spending money and giving up physical cash to pay for something, that thing that you're paying for intrinsically is worth more to you. So if you start buying stocks with your own money, especially if you don't have much to begin with and you are using this as a catalyst to your future and improvement, and you tie all of your emotions into, oh, I'm investing, I'm ahead of the curve, I'm investing before everyone I know, and I am putting all of my money on this so then I can have a good future. So then your brain is now thinking, all of this money is not investments, all of this money is my future, and every time it goes down, I'm destroying my future, which is not a very good mentality to have.
Yeah.
This should be money that you are willing to lose and that it is a help to your life. It is a help to your current mental state because you know that you have this reserve of assets that you can liquidate and use as an emergency fund if you need it. But it is money that you are willing to let rise or fall 10 to 20% as you go along. Make sure you cut out anything that is falling significantly. But when you're investing, the main thing to pay attention to is how emotional you get about a stock. The most common thing that comes to me when it comes to people being emotional about investing is it's this hypocritical duality where if somebody bought a stock for higher than it's currently valued, they think, oh, I can't sell because my average is too high and I can't take this loss, right?
Yeah.
And then if they bought the stock on a low and it's currently high, well, they're like, well, I made a good decision. Why would I stop that decision now and lose out on the money of the future when it goes up? So then you have people who don't sell when it's low, and they also don't sell when it's high. So then they are constantly in purgatory of whether or not they're going to actually profit. You have people who have essentially hordes of stocks in their portfolio, regardless of whether they're down 30% or up 500%. They refuse to take the profit out to reinvest in better opportunities. Because if you have a stock that's down 20% right now, yes, it might go back up to break even, but in the time it takes to break even, you could find a stock that goes up 50% and you'd make more than your money's worth before that stock even gets close to breaking even. You want to try and avoid what's called a cost sunk fallacy, which is where what you pay into it is what you need to get out of it. So it's the same as if you started watching a show on Netflix, you have invested your time to watch it. Even if you don't like it, you might finish the episode simply because I've already started it. I have to see where it ends. I'm paying for my Netflix or I'm paying for this movie ticket. I'm going to have to sit through it and get my money's worth. But in the case of that opportunity, if you were to leave a movie that you already knew that you didn't like, you still have an extra hour of your day that you can spend enjoying rather than begrudgingly putting up with something that you know that is not beneficial to you. Same goes for stocks. If you pay for something, don't think that it is worth what you paid for it. You might have paid for it while it was overvalued, but you just didn't know that.
No, that's
and
a good
don't feel like that's a mistake.
I mean, we can see that human tendency in relationships as well, right? I mean, people stick it out rather, they figure I spent all this time, the past 3 years, and it's hard to make that decision to cut ties. And we see even, people like Warren, Buffett cut ties with his stocks, right? At some points.
Yes.
For various reasons. Listen, thanks so much for coming on the show. I really wanted to also get into Bitcoin, but if you're open to it, we might have to save it for another episode.
I would love to do a whole episode on cryptocurrency. I'm definitely on for that.
It needs that sort of treatment, of a full episode dedicated to that, because that's the new wave and that's going to be the future wave. If people want to get a hold of you, what's the best way to get a hold of you? And I'll put this in the show notes as well.
You can go to my Discord. I have a Discord group that is public. I will send you a link to that.
Okay.
This is where I communicate about stocks. I do have a Patreon, which is a paid subscription service where you can get more details about my research and sign up in order to have video calls with me where we can assess your portfolio and understand what strategies you should be taking in order to possibly optimize your return for the next coming weeks or months or however long you plan on investing. But the easiest free way to get in contact with me is through the Discord server.
Discord server. Okay, perfect. And then, of course, you've got that YouTube channel, right?
Of course.
Canadough
Finance, yes.
Yeah, and I'll put that in the show notes. Okay, amazing.
Perfect.
Thanks so much again for coming on the show, and I'll catch you on the next episode where we get into cryptocurrency.
All right. Thank you.
Thanks.